Good morning, everybody. As we're getting set up here, we've had a nice night, overnight here, and good morning. We hope you're doing well, and welcome, YouTubers. Let's take a look at a few things. First, the strategy. The strategy is running. I should write it in here. It is. Let me. We don't have the position up there, but you can see the position running right here. This is it right here. And so we'll just strategy running is the SMC 7-iron 7-iron beta strategy. It's new. It's new. And now it had a okay day Monday. It was profitable. Had a nice day on Tuesday. It was down yesterday and having a very nice day today. So it's profitable for the week. We did, I want to say 275. I don't have my notes right in front of me. 275, I think it was on Monday. I think about 1,200 on Tuesday in terms of money. We got all the other detail, again, not at my fingertips here, but then yesterday was down. The full day, I want to say about 1,900, so it was down, and then wait to the good over $3,000 here today. So interesting to say the least. If you have any questions, you're more than welcome to visit the website. We're in the process of redoing our website. No deadlines on it though, but we are going to have a new website here in hopefully short order. And but if you have any questions, feel free. You're also welcome to email any subsequent questions. And if you're real serious about things and you want to talk on the phone about what it is you've been doing or what it is we offer, you're more than welcome to give me a call. Make myself available any day, including weekends, 9 a.m. to 9 p.m. One of our annual members who's been very successful, remember he called me on New Year's Eve at 3 p.m. Susan said to me, "Are you going to take that phone call?" I said, "Of course I'm going to take that phone call." Somebody wants to talk about the markets on New Year's Eve. That's just the person I want to talk to. And his name is Adam, and he trades Rinko bricks with Swing Machine, and he trades in a robotic fashion and has done extremely well. He's on his second year with us. Swing Machine at 855, the VIX goes long. 835, the market had already turned down, up 275, 830, 645, 835. We probably had an economic number, and 820 gold turned down. The nice thing about having Swing Machine, I blocked out my title there. I mean to do that. Let me see if I can fix that. Oh, there it is. Can I do that? Yeah. Let's see here if I can reposition some of that. There we go. All right. So this is Swing Machine. The nice thing about Swing Machine, you'll get a greater appreciation if you ultimately have it on your desktop. When you have it on your desktop, you really don't need to listen to much of anything else or anyone else, actually. It'll tell you what's going on in any market. It'll help you stay out of the market. Like if you want to be buying, if you woke up and said, "I want to be buying something today," Swing Machine will be saying, "Well, you might want to wait." So it can keep you out of markets. That's a valuable asset. It can also help you stay on the right side of the market. If you wanted to come into the market today, you want to be selling right now. And then it can also help you stay in a trade, right? You see these trades, we very well may come back later today and see this 835 and 830 trade. These could be up thousands of dollars. Now, if you run in and get your $200-300 and that's the way you want to play, then that's fine. But in time, the machine will be trying to help you because you'll get tired of, not tired, but you'll get what you'll get. When you take out 300 and you see it's up $3,000, you say, well, maybe next time I can afford to be a little bit more patient. And then the strategy is running down here. It's been running since midnight. It is booked $2,455, and it's in a trade right now, and that trade is up 745. I don't have the position window open, just trying to save some space. If you have any questions, feel free. We're going to let you watch the open here a little bit on YouTube. It's 9:14 in the morning. Tomorrow is a holiday. I think the stock market will be closed. Futures will be open tonight, and then we'll probably close sometime in the morning or maybe a half day. The banks don't like leaving their money exposed. They'll let you leave your money exposed. They don't have a problem with that at all. After all, it's your money, not their money. But their money, they don't like leaving it exposed. So they value that liquidity, as we do too. Stock market caddy. Good morning. Good morning, everybody. We're just doing a little housekeeping there. We are still running a strategy. We didn't have the position window open. She's flat right now. We'll see if it can show up there to give you something to watch. What I wanted to comment on is we got the VIX 855 VIX going along. 835, the market moved before. So 835 T time on the ES, you're up 600. 830 T time on the NQ. If you were here for it, you're up 1300. 835 on the Dow, you're up 255. 855, so everything between 830 and 9, 300. Gold coming in at 820, you're up 350. And oil, we're kind of crowded here. What is oil doing on the 5-minute is basically trying to get short there. Oops, bring that back into view. And the strategy has done since midnight $2,831.80, running fully robotic, no scalping, no profit targets, no nothing. Running on a 3-line break strategy, a 1,000 tick count 3-line break. So we've been running that all week. We'll have some numbers at the end of the week. And we're going to continue probably running that next week as well, and be able to do some adjustments. I really think it's been very scalpable, although we didn't scalp it. We just kind of let it run. Profitable day Monday, profitable day Tuesday. Monday about 275. Tuesday about $1,000 to $1,200. Yesterday it was down as much as about 1,900, and then today doing what it's doing. So what was it about yesterday? And yesterday I think it could have been scalped. That's what I mean. It was pretty choppy, and I really do think that we could have done better, but nice recovery here. It's a beta strategy. And good morning, Tina. Good to see you. Now it is the Friday before the holiday. The stock market, public stocks will be closed tomorrow. Futures probably be open tonight, I'm guessing. I haven't looked at the holiday schedule. I think so. And usually they close about midday, but sometimes they've been closing like around 9:30. So, if we're in a bearish market, if there's a bearish sentiment, usually the market doesn't like to go into long weekends long. If we're in a bullish state, they usually don't like to go into weekends short. So I'm thinking, we're still of a mindset that we're in a bear, and so I'm not surprised that they're turning this down. And Gabriel, good morning, Gabriel. Gabriel's asking if we're running the 7-iron wide open or with stops, and we're running it wide open. Yep, been running it all week wide open. Yeah, now one could have stops, right? Could use stops, but we're running it wide open. Wanted to see what it could do. It's relatively slow. It has some of our strategies have this feature built in. This one has it built in where it can be optimized, Gabriel, and what it's capable of doing. It in the back test, we have a frequency setting, but we also have a look back, and there's an order. Let's see if we can clean that up. And then it has another setting for occurrences. So it's looking, it looks back for frequency, and then it looks back for this range that we should look for the number of occurrences of the condition. And the idea being is that maybe it can help us slow down. And it has. It actually, now we can do this. We can do that arrangement with a whole lot of other things. And usually we don't, if we build it in, we don't give it an opportunity to optimize. We don't want to over optimize a curve fit. But in this instance, we thought, let's try it. And so it's there. Jeff has a copy. And you'll have to keep us posted, Jeff, on what here, maybe he's just curious. Would you say generally for a strategy to be deemed viable, it should be in principle? Okay, let's look here. Just curious, would you say generally for viable? Um, yeah, I mean, I want to see, yeah, it definitely makes sense. We want to be able to see the strategy. Now it depends, right? Now it always depends, right? I hate that answer, but it does depend. This particular strategy, our observation has been that it's doing pretty well overnight. Um, so we've made note on that. It seems to be doing pretty well. Why is that? Quiet market, maybe. Um, but when I'm running it wide open, at minimum, I want to see that the strategy is profitable. And I mean profitable for a week, not, you know, I mean, folks could tune in on a given hour or a given day and the strategy be down. I also want to see how volatile my account is, right? I don't want a whole lot of a volatility in the account. So yesterday was a little. So we ran from on Monday, Sunday night, from midnight to 3 in the afternoon. And the biggest drawdown the account had all that time running one mini NQ was $800. I consider that good, but it's only one day. On Tuesday, from midnight to noon, the biggest drawdown it had was about $200. And then the rest of the time, it was profitable the entire time. And it had now it finished with about $1,200, it was about 1,500, and it had a high water mark of $3,000. Yesterday was not so good. Yesterday, she was not profitable much of the day, much of that from midnight all the way through, and got progressively worse during the day, and had a draw of as much as 2,100. So I didn't particularly care for that. And then we were able to peel that back to about 1,900, 1,800. And then today, you can see what it's doing now. All that was posted overnight. So she had an exceptional overnight session. And she's doing so. We'll keep an eye on it. We're going to let it run. We'll probably shut this thing down at noon. So what am I interested in? I want to see um, when we have a strategy, could be beta strategy, could be any strategy. What I want to see, I want to see what I want to see. I want to what I feel I need to see. So and I'm interested in the account volatility, and I want to run it, wide open, um, and and then begin to think about what I might do to tighten things down a little bit mechanically. But you can't make a decision on any strategy like just for 2 hours, or I mean, you might be running something for 2 hours a day, but you're going to need a week's worth of data before I think you can. And then the other part of it is, Gabriel, as you know, it's maddening at times, because a strategy may fall out of favor, and and then come back into favor. So you got to be careful not to, um, let's take a look here. One follow-up. If after these experiments with the ions, if you looked at the back to time, Well, we've been looking at the back test has been fairly close, but the trade manager analysis has been, you know, excellent. So, you know, so during the week that we're running, um, we're gleaning what we can from the trade manager analysis, but the back test has been um, fairly close, fairly. So, and I think just got everyone's got it needs to remember, and we're on YouTube right now. People are hearing this. Um, you always got to guard against, you know, this notion of a holy grail. There isn't one. There isn't one. Okay. And so if anybody is looking for the Holy Grail, um, there if there if there is one, it's in the mirror. It is you. It is you. But if you're looking for someone else, you're looking for one indicator, you're looking for one strategy, you are looking for that one thing, you know, a person is going, I know you know this, Gabriel. So, but a person is going to be disappointed because they're looking for something that doesn't exist. I do too. I wish I could turn this on and every night print me, $3,000 while I sleep. It could do that for 2 weeks in a row, though. It could, and then it may not. So there's that uncertainty. And so that Holy Grail is going to be each. Well, yeah, he says, yeah, I could if I was the Fed. Yes. Oh, yeah, regional bank. Yeah, shit. Hey, send me some more money. Did you guys see last night? If you didn't see it, I won't go political on this, but if you didn't see it, Tucker Carlson is going to get himself. He can talk about anything political he wants. He can do anything he wants, and they probably will leave him be. But he starts having the conversations he was having last night, and he's probably going to get himself yanked. He was talking about the dollar and the reserve currency. So if you didn't see it, he's got a 15-minute segment. It's up on the Fox YouTube. Everybody needs to see it. It was beautiful. Now, what is absolutely amusing to me, though, is that he said, like, we've been tracking this for like the last year, and that was a belly laugh to me. I mean, I just wanted to get on the floor and start rolling around laughing with Ted. I mean, that's this game has been and is being played, for the last 100 years. This notion that the dollar has been weaponized, that's somehow something new. But if you haven't seen it, you want to. But we're going to let this run. We're not going to let it get negative, that's for sure. So we're going to let it run, and we'll probably look to turn it off at noon. And we're letting the folks on the YouTube watch a little bit, and we can take a look at swing. 835, 750, 830, 1400, 835, 525, 855. So here's Swing Machine printing. Now this Swing Machine can be, for new members as well, can be maddening in and of itself, because what we will hear many times is, Don, how come when I look at Swing Machine at 830, it's up 1500 and I don't have that? I have 300, I have 200, I only get a little bit. That's where one needs to learn to use the tool and to learn their own comfort level, and needs to practice that, right? In golf, you're going to have these masters playing, up in Augusta, but in golf, when you first learn to play golf, there's another trade. The golf pro will tell you, don't squeeze the club, don't squeeze it. tendency for a new golfer is to, really, really grip that club hard and squeeze that club. And you can't swing the club because the club is you get a death grip on the club. Need to relax your grip, in golf, right? In trading, and it only comes with time and with practice. You need to relax your trading, and you don't have to trade, all day, every day, and trading 20, 30 times. Now, if the machine is doing it, the machine is doing it. And, and it's not going to get every winning trade. We were up as much as 2,800 and it's now 2,400. And if you begin to ride emotionally the money, then you'll have a very, very tight grip, and you'll have a very, oh yeah, that's it. I mean, you'll just be very tight. It's going to be, and it just comes with practice. Oh, yeah, this Gabriel was asking us, one of our members, about central bank digital currency. I think it's inevitable and of sorts, but we'll see. I mean, I'm against it. I'm against that. Always made me wonder, where the digital currencies really first came from, where they really they were perceived to be liberating and away from government. And also I was like, you know what, maybe they were created by government. It's the same thing that I don't think you can have a free democracy with a digital currency. I'm not for it. And I'm not for centralized, banks. I'm not for centralized big anything. I think we need, competition in everything. Whether that everything be, big pharma, big education, big oil. I could never understand at the turn of the century in the 1900s, 1910, 1920, communism was raging around the world as a new paradigm and it was really taking hold. And of course the Bolshevik revolution in Russia, and a lot of industrialists at the turn of the century were going to Russia, and it was you wouldn't think that they were pro that system, but they were. What happens, and I couldn't understand that. It's like, well, how could Ford and how could these industrialists that that had made it through capitalism be for a system of government that doesn't foster capitalism? It's just that once they get to that size, they don't want competition. So their politics change. Anywho, I digress a little bit, but so I think competition is good, and I like freedom of it. I don't like and you get this ass clown O'Leary from Shark Tank, talking about, we don't need regional banks and everything should be online, and that's the way it is in China and everything. The China model is not what we want to do. In my view, we don't want that unless you want to just kiss your freedoms and everything goodbye. The problem is the really young people and everything coming up in these madrasas, they just don't understand it. They just don't. It's very discouraging that way. And they will understand it, but it'll be too late. Maybe too late. No. But But the regional banks, O'Leary saying, oh, you don't need regional banks. All we need is, we could just, that would all be um, compartmentalized into a central bank or five or six big banks. And the Federal Reserve was formed in 1913, principally as the country was blowing out west, to protect the central banks or the money-centered banks of New York from any other big competition that might come out of Dallas or San Francisco or Chicago. That's what they were out to do. They're out to protect. Why don't we want regional banks? If in Texas, there's a group of people that want to, you know, put their skills to work to try to develop, um, some oil fields or energy fields, and there's just a few people controlling their loans out of New York or or out of DC, and that's not fitting. There's a policy that we're only going to do, windmills, then they're not going to get their loans. They're going to shut them down. If you got a regional bank in Texas, they're probably going to get their loans to do what they need to do. It's just like everything, right? When decisions are made at a central level, on everything, do we want a federal educational system? Do we want a federal police system? Do we want a federal college level? I mean, everything is just, then we get the Pfizers of the world. We get, not good. So I'm a capitalist. I like competition. And we look at look at the media. Isn't it's ridiculous, right? I mean, how lockstep they are. I think these. Yes. Yep. Yep. Totally agree, Gabriel. Totally agree. And that guy, O'Leary, you only have to get rich once, right? You only have to. And I don't know if he's a billionaire. I guess he is, but he took over, I think it was like a learning company, and he ultimately sold it. And the company that bought it damn near went broke. You know, um, he's got all the look, right? He's got the $2,000 suit. He's got the 2000, the $20,000 watch on. He presents that image. It's all imaging. And they could have been crooks. They could have been frauds. Did you see the story about the girl? I think she was down in Miami, and she had supposedly created a business that it was, I think, an online business loaning supposedly to college students. And she fabricated a bunch of her data, and she sold it. She sold the business to JP Morgan for 175 million. And now she's being, charged with fraud. It was total fraud. Um, Mark Cuban, I mean, he sold a crap company, broadcast.com, to Yahoo for several $billion that virtually put Yahoo in the tank. But it's now, he's now Mark Cuban. He's now, he's cleaned up his act, or cleaned up, he got rich once. I digress. Good luck, everybody. We'll be here watching. Thanks, Gabriel. Go slow. Um, Now we could begin to do some things, right? As an example, I could make a decision that the NQ is still short on the 5 minute and it's long on the strategy. So I'll go ahead and I'll close it rather arbitrarily. I mechanically closed it. And I'm going to need to reset my strategy so I can mechanically intervene. This this is the other part about expectations. So is Julian here? Let me look. Julian is also one of our newer annual members and has been doing pretty well from what I understand. And the last time I had talked with the last couple of weeks, and he's doing something very specific with Rinko. And he was running a very specific strategy. He netted was 2 weeks ago. 2 weeks ago for the week, he netted $5,000. Now that sounds really good. It is really good, right? Anytime you make any money, I mean, it's good. And certainly if on trading one contract. And I believe it was the NQ. His profit factor for that week was 1.3. Now, I thought, and I think we discussed it a little bit, Julian and I, that at 1.3, I thought it was a little bit narrow. But he subsequently told me that was fully robotic. And so when we're running with the machine, if the machine has a profit factor of 1.3, 1.2, even 1.1 or 1.5, I want it higher. But if the machine is doing it, I'm okay with it. I mean, it's a machine. I'm not having to grind on the trades. If I was trading and making decisions on every individual trade, having a profit factor of 1.2 or 1.3 would be very hard. It would be a bit, it would be grinding. So I think I'm not going to say that I necessarily suggested this, but he made a decision in the subsequent week, said, well, maybe I can develop some mechanical filters. So now he ran, so 1 week he runs the strategy at 1.3 and he starts thinking about, well, maybe I could mechanically intervene based on what he sees on Swing Machine, and he had some other criteria. And the next week, and that's what he does. And then suddenly, and not unexpectedly, he's starting to get profit factors of well, the last one I heard was 30. So you start getting a profit factor of 30. That means you're making $30 for every dollar you lost, and he wasn't in the market very long either. So he was running, kind of wide open that first week. And then the second week, he's filtering it. He's using, I think it was Swing Machine and the strategy. And he's filtering it and he's trying to keep his exposure in the market down. Because if you're not in the batter's box, you're not going to get hit by the pitch. You're forcing, when you're in the batter's box, you force the market to pitch to you, get your hits, and get on out of there. You don't have to be there to the extent. Now, we're here quite a bit. I need to be here. I want to be here, but you don't necessarily have to be. And so when I talked to him last, it was like on a Tuesday or a Wednesday, I think, of last week. And he's out on the West Coast, but said, Don, I made my money for the day. I think it was like $1,300, and he was in the market like for 20 minutes. Great. That's it. You're done, and now, and it's all scalable, that's with one mini. I think if you're making if you're trading one contract, one mini of the ES and you're, picking up a point in a day, I think that's a very fine day. There will be days that you have something like that, but a point is very fine. Of course, if it's a micro, it's going to be 100. If it's 10 minis, you know, then it's going to be 10 points, it's going to be 10 grand. But I don't suggest anybody who hasn't been doing this a while, come in and start, betting the ranch for the house. Not a good idea. So the machine is still, it's still in that long position. We may have come out a little bit early, but that's okay. And so if I intervene, if I do, I'll let you know. Otherwise, I won't put the trade on though. Only let the strategy put the trade in. If I intervene, I'm only going to intervene on the profit side. I won't intervene on the stop loss. I won't intervene on the entry. And I might intervene just to say, you know what, we're done. Just shut it off and turn it down. But I'll let you know if I do it again. But right now, the next trade will be put in by the machine. By the way, Gabriel, I'll just share with you because you and Julian started very close to the same time, if not exactly the same time. He was running, and it's interesting. He was running classic Rinko on NQ, and he was running the Rinko kept simple. Rinko kept simple, and he had it set at a one brick level. So it was a long on a one brick. The sell side, he set it at 0. So it was just going from long to short, one brick. And he was running that kind of wide open to see what he could see. And he started to experiment with the brick sizes. And he could probably tell us better, but it was interesting. I think he had started out with a pretty small brick size and then ultimately started migrating to a larger brick. And we do see that a lot. And it happened to be very close to the brick size that, the brick size calculator was suggesting as well. And then began to refine his profit taking using swing machine at a 1 minute level, refining it and capturing his profit. So we'll get a check and see how. Hopefully he's had another good week. And but he has stayed with that. He has locked in on that. So we got a whole bunch, and this for the benefit of everybody, we got a whole bunch of different strategies and approaches, and there's a number of different charts that we can use in conjunction with swing machine, and you just can't trade them all, and you just don't want to necessarily change from day to day to day to day. But you settle in on something that looks and feels best to you. And anytime any of our members, this for the benefit of YouTube, any of our annual members, we will always, they can send us a note to tell them exactly what it is we're running, exactly the brick size, exactly the settings, and they may choose to do something different, and that's totally fine. We don't dissuade that. Just all I ask is don't forget me. Let me know. Um, you find that a particular strategy might be is not possible. If I, like on the 7-9 strategy, we've been all week just running on one thing. Susie's been busy doing her thing, so I only have so many computers, but so I don't know, what it might do on some other chart or some other configuration. It takes a while, but so that's where what we'll do is when we have something, a new concept, if it's a piece or a full strategy, we'll develop a beta, we'll run it. If it holds a little bit of promise, if those folks who say are annual members that they want the beta, we'll get it to them. Some don't, which I understand. It'll be like, I'm just too busy for it. I can't, and they'd rather wait. If ultimately, though, it passes muster, which could be a few weeks, could be a few months, then it'll go into our library and then we'll get it out to everybody. But this one is probably going to be a while as beta. I'm not sure. I'm not sure. Okay, so the strategy has just gone short. I'm pretty comfortable with that because the 5-minute swing machine is still short. So we're going to leave that one alone there. We'll let that run. And it's short because there's a little minus sign in front of the NQ. At this hour, it's 10 o'clock, trading one mini contract for those that are on YouTube. In margin, we're using about $1,700 in margin. Pretty sweet. Hey, now I just had to step out. So this trade is underway. It's not trading real fast, right? We're to the good. We've been as up as much as 425. We've been down as much as 195. And now, if you want to, if you're watching on YouTube and Tina says, "Hey, I'm taking that 365 bucks. I'm taking that $370." You could, we could. I'm going to let it run because the NQ is also on Swing Machine is still short. It's still short. It did rip against it. That's why I chose to be a little bit more aggressive on the profit side, on the long side, because the Swing Machine was short. But I'll be more patient here to see if we can let that run a little bit. It isn't running this; it's running something different. But I can blend. I can use different tools. But you may choose to take it. Do you have the discipline to stop? You know, if you're up $400, you okay there, Ted? You're choking on a milk bone there, buddy. Do you Are you going to keep trading the rest of the day? It's not, gambling. I'm up 400. I'm going to try to turn it into something else. I'm going to do a little of this. I'm going to do a little of that. I heard something on this on CNBC. Oh, I heard O'Leary talking about gold. I think I'll go buy gold. I mean, that's craziness. That sort of thing is craziness. And we literally have people that call and tell us that's what they do. They actually do. Um, I had one gentleman, he was sounding like a very nice person. He was actually a pastor. And I asked him one time, I said, how do you make a decision? He goes, well, I just listened to hear what they're talking about on CNBC that morning, and then I go buy it. Yeah, okay. How's that working out for you? Not so good. Scary. He's got this thing called a Kong. It's like a big red. The guy who invented, one of our members told us this, excuse me, because I don't remember whom. Um, he you talk about, situational awareness and being aware of your surroundings. From what I understood, he worked in an auto body shop. If I have the story right. And he used to fix brakes and stuff. And he had a dog, and he would give the dog I don't know, it was like a brake liner or something, or the shoe, the brake shoe. No, it was the shoe. It was a big rubber part to the brake covering. The dog would just gnaw on the thing all day. And he made these things they called Kongs, Kong. That's a big rubber, it looks like a rubber bell, and you put cookies in the damn thing. And I tell you what, that dog, he loves that thing. And so he'll come over, whenever it moves him, he'll come over and drop that Kong on our lap. And so put some cookies in this thing, will you? He's over there gnawing at it. You think, and he can't really, it's like super strong. He's had it for a couple of years, and he just keeps him entertained. But the guy who made the Kong, he made millions, he's a multimillionaire. Go figure. Okay, so we're getting a little long re-entry. So I'm going to go ahead and I'm going to on the 1 minute, and I'm just going to go ahead and close that if you don't mind, right? And I'm also thinking And this is what we can do. It's like, this thing's been trading since midnight. And now the machine just put that in. I didn't, right? My cursor's over here. It's been trading since midnight, and I really don't want to go beyond 12. So I'm thinking, we're getting ready to wrap it down, So I mean, I could start, trading this thing even more rapidly. If I wanted to go up there and just grab that $100, I could. And I'll take the 60 or 70. All right. Um, and I'm just doing that to kind of demo. You can be as active as you want to be. In the beginning, our experience is that folks are too active, trying to eliminate all risk. You can't. There's no reward in anything. There's nothing good to come of a no risk situation. And so we could be trading. I could be trading this very same strategy. We could have three people. Gabriel could be trading it one way. I could be trading it another, and Tina out there could be trading it another, and we could have an entirely different result. But I wouldn't think that any one of us would be down. That's where when Gabriel, one of our members, was asking Don, when you run something wide open, for a week, what are you leaning toward? Are you leaning on the profit factor? Where does it need to be? What I'm not looking for is absolute perfection, because even if a strategy performed perfectly, just, profit factor at 10, the likelihood that it's going to do it that next week exactly that same way is somewhere between slim and none. It might even do better, but it may not. So I'm not looking for perfection, but I am looking, for something that is going to keep me, you know, comfortable. I'm looking for comfortable trading. Hopefully that makes sense. Again, those that are on YouTube, if you have any questions, let us know. And we'll let this run until probably about noon. And markets can sometimes trend pretty nicely overnight because, all the yahoos are asleep, all the people like, throwing, throwing a ton of options on or a ton of futures on and pushing it this way, pushing it that way. Middle of the day gets kind of choppy. Whereas overnight, they're all asleep, not doing that, and get in and do what we need to do. You're not that far removed from, having 10 days, 10 of these, your confidence level will actually go off the charts. That's a big question, Gabriel, that you asked there, without, getting delving into options in a big way. Um, but I'm not a big fan of buying stock and then trying to buy a put under it to yeah, no problem, no problem. But I'll answer it. I think um, I can tell you where to start. Um, but I'm not a big fan of buying stock. Buy when you let's say you have $100 stock and buying it at 100 and turning around and buying a put underneath it to try to protect. Not a big fan of that. Um, Unless this, an isolated event, because you'll chew up all your profits buying the insurance, and most of the time you won't need it. But I think the best way to go for folks who are looking to, and you can do this in an IRA account. The government allows you to do this in an IRA account, is to buy $100 stock and then go one to two strikes above, 1 to 2 strikes above, and go out about 30 to 45 days and sell a call against it, and then just leave it alone. You need to leave them alone. Um, you know, and you don't want to be selling a call for a week or something. That's trading it too actively, and I don't want to say anything definitively that that you never do it, but in starting out, you want to do it 30 to 45 days out. And what you want to see happen is you want to see it teaches patience. Of course, if the price goes against you, if the stock price goes against you, the call that you sell will go down on value. And if you can buy the call to close for 10 cents on the dollar, then you will. And then you can reassess. You can redo it again, or you just close the position. But ideally, you buy a stock at 100, it goes to, you sell a call at 105, they pay you so much money, maybe 250, the stock goes to 110, 120, whatever. Oh, you make your money. You make from 100 to 105 plus your 250, you make your 7 or 8%. And just do that routinely. The question is, where do you want to buy the stock? You don't want to be buying it when it is in euphoria. So this is on a daily basis. So yes, we have those different tools, as you know, but this tool here, you want to be buying the stock. This says futures now, but you want to be buying the stock when it is in panic, and you want to sell the call 1 to 2 strikes out. It could be at the midline, or in the option chain, the delta might say at about 25 or 30%. And you just keep redoing it. And it's a great way to go if you can get in the habit of doing it in your retirement account, because it's all tax-free or all tax deferred, and you can really do well. And it teaches patience. You just got to leave them alone, not actively trade them. Does that make sense? You just have to do one. So let me just look here. I go to let's see, you just do one, and just to do it small, and see how it plays out. Let me just go look here. So let me just bring this into view. Here is our options club selector. So you could use this tool, and you can do it from here. So you get something like this. In any one of these, here, it's the stock right here. Any one of these, you could buy 100 shares of it and then sell a call against it for 45 days. Any one of them. Now, if you want to trade options, you could do the spreads and so forth. But, if you're just getting your legs, covered call writing is the best way to go. So I'd look here at something like, maybe John Deere, he's been really trash. It's trading at 370. But although you buy 100 shares, it's 37 grand. So it's quite a bit. But what is this? Tapestry, maybe buy 100 shares at $40, it's $4,000. Go, the midline is at 41.28, but you go 1 or 2 strikes up. You buy it here and sell a 42.50 or maybe a 45 for 45 days and just leave the thing alone. So you want to be buying them when they're in here in panic. And as far as doing the short side, you'd be doing the opposite, but I would just buy them. I wouldn't try to reverse it necessarily. It isn't a fair fight in stocks, on the short side. That makes sense. No problem at all. They're a great way to go. I mean, it's amazing how much money you can make if you have it in your retirement account. I mean, you can make a year's pay selling call options. You absolutely can. And you're not watching them during the day. Just want them to get decayed. You're in what you have to see it to play out. But if when you buy the stock at $50 and you sell a 55 call, they're going to pay you. And you have to see how it's accounted for. They're going to pay you, what they're going to pay you. Maybe it's, $2.50. If the stock falls shortly after you buy it, that call option will act as insurance. And now I won't try to actively trade it, but if I can buy the call back, pennies on the dollar, I can buy it back for 20 cents or 50 cents. Then yes, the stock is going to have gone lower, but I'm going to capture that profit, and I'll just, buy the call to close, reassess if I want to hold it or reassess if I want to do it again. And I'll probably do it again. When you buy the stock and sell a call, you want it to get called away. Just don't try to do anything with it. The best thing that can happen is the stock runs up, far higher than you would have ever dreamed. Yes, by selling the call, you're short at that strike price, but you make the spread, you make the difference between your cost basis and where you sold the call, and you collect the premium. And end of story. And then just turn around and do it again, and just keep doing it. So, you want to find a market that is flat to up. Gold stocks right now. Gold stocks, gold itself. We've been doing it on the GLD. The other way that you can also get, wondering if it's not worth doing it if you're doing them. Wondering if it's not worth doing if you're doing them in a standard tax account. I still think it's worth doing. I still think it teaches patience. Another way to go is you can get synthetically long by putting on a put spread, right? So say you have a stock that is in panic, and let's bring this back into view. I think I'm going to bring this. I gotta bear with me. Nope, I got the wrong screen. So you have this here. So you have a stock like this, and you're thinking, okay, Deere, boy, it's really in panic. I want to buy Deere. I want to, I'd like to buy it, but boy, I don't know. What if it falls? What if I buy it at 370 and it goes to 360 or 350? Well, then sell a put credit spread. So what you do is you go out 45 days, And maybe you don't sell it at at 370, a 371. Maybe you sell a 365 put, which means the put could get put to you, and you collect a premium for that, and then you turn around and take a portion of that premium and buy yourself some protection for the downstream at maybe so if you sold one at 365, maybe you buy a put at 360. What you need to have, though, and that would be a put credit spread. It's a synthetic way of getting long. If the stock, you want it to run, and if it continues to run, you just keep the premium. But whatever the spread is, if the spread is $5, you want to be collecting at least 30% of that spread in a put credit spread. But this is telling you, this is our tool. It's telling you but I could have put covered calls on every, we could have coded it in, every one of these would be suitable for a covered call. I just didn't put it in, but they absolutely all would be suited for covered calls. But with options, the issue with options is they just take time. And I mean time. I mean days, weeks, months. So when we're trading, futures, we get a lot of tactile feel. We get a lot of immediate feedback from one day to the next, a lot of practice. But options takes months. And you can't be, I'm not into trading weekly options that way. You have to deal with liquidity issues, and I'd rather just do what we do here with the futures. But call writing, but you want to be writing calls, on a market that is flat to up. So maybe that's energy stocks. Maybe that's gold stocks, commodity stocks right now. I don't think I'd be doing it with the NASDAQ in euphoria, right? If the overall market. That's the other thing. If you're going to be doing it with a stock and you're going to be trading options with a stock, you need to drill down. This is in general. What market is that stock in, and what sector is that stock in? And look at that sector. If that sector is in euphoria, then, and you're in there selling covered calls, you might get caught, You want to get them when no one else wants them. So like energy stocks, over the last couple of weeks were really trash. If you had got in there and bought stock and sold calls against them, that, you got like guaranteed money. Make sense? Oh, let me look. If the stock moves against you could, at the cost. No, you would just look at your, put the stock into swing machine. So you're looking at CME. So you could do something like this. Let's look at CME and put in CME in the stock. And let's put CME on a daily basis. Okay, CME is long, right? So I would be okay buying CME. But is it a candidate for a covered call? Not in my view. You were up here at 80. So I wouldn't buy stock here at 193 and sell a covered call just to sell a covered call. What I might do, she's trading at 194. I might sell a put. Maybe sell a put at 187.50 if they have it, and go down and buy a put at 180 for 45 days and try to collect the premium. But you want to be careful too when you're doing that sort of thing. Do they have earnings in between? And we're coming into earnings season. So another factor to take into account when you're doing options. They're complicated. I mean, they're involved. I mean, and if there are earnings there, we might be overpaying. a little bit, but I wouldn't do it. I would want, so Deere, let me just put in Deere here, John Deere. So Deere is in a short mode for 20. So it is trending down. But it isn't panic, So I would be more inclined, even though it's in a downtrend, yeah, maybe, I don't know where they are with earnings, got to figure out where they are with earnings, but I'd either buy a call, sell a call, you buy it at 370, sell a call at 395, or go on the delta, off the delta, or sell, again, sell a put and buy a put credit spread, that sort of thing. So then you're using the two tools. Another way to go is, well, those are defined risk, So ideally looking for a stock that is an uptrend. Yeah, ideally. Yep. That is pullback. Yep. There's a lot of them, you just put them in, just put them in, get your S&P 500 and your NASDAQ into your radar, and then sort them all and panic, and then see which ones are in an uptrend. And those are the ones I'd get. Exactly. That's exactly what I do. And then just don't get it, just when you're doing it for the first time, but you got to wait, you got to wait 45 days. You want them to expire. So you can't, want to be in there, trading them too fast, and understand how they account for them. When you do a covered call, the brokerage is going to account for the core position. You buy something 100 shares, it's going to continue to show you your profits. You sell a call against it, that's a short position. And if it gets above that, it's going to show a negative. You need to understand that, you need to be able to see that, so that you don't panic and do anything stupid. Not you personally, Gabriel, but anybody. There was that gentleman at Robinhood who didn't, I think he had done a covered call and didn't know what he had done, and saw, was actually making money, and he ended up killing himself because he didn't understand what he had done. So you want to, in the option club, it is possible to add a column for the swing machine. I suppose you could, if you wanted it all on one radar, I suppose you could. Yeah, I mean, you could add it in there. I mean, you could add the swing machine in there right beside the club selector. Yeah, I mean, you could, if you got a big enough screen, you could do something like that, and you can hide columns and everything. The club selector is just showing it. It's showing you, it's getting you in the right neighborhood, in panic or in euphoria, and then it's making a decision based on implied volatility, what the best option layout might be. But it's not to say that you can't do a covered call or structure something different, But like I say, the biggest challenge with options is, especially for anybody that's been trading futures, is that they just take, the way that we trade them, they just take time. You just gotta, it's kind of like hitting the side of the barn with a shotgun. You just kind of get, that's the way we trade them. If we want to trade with a rifle and hunt down, we're going to use futures. But covered call writing is phenomenal. It's great. It's very, very good. It's just very good. And in this market, I mean, that would have been a great way just to, and if I have an account that, it's got a hole in it for some reason, and that's what I kind of want to do. I just want to get it restored. I'll ask Susan, to pick up her call writing and, buy the shares and sell the calls. You just, again, if we left that on Deere, so, and she is, at 370. So that's kind of what I do. I'd, come in, buy the shares at 370, sell a call at 375, 377, something like that, for 45 days. But the only question is, though, do they have earnings? They might have earnings. And if they do, and they've been beaten up down, you may overpay because as soon as the earnings come out, the volatility will get sucked out of the option. So I'll put that back though. But they're a great way to go. And I say the government will allow you to do that in your IRA account. They shouldn't have anything to say about anything, but Okay, so we're getting a little bounce here on the strategy. We're to the, back up here. This is getting long. So I think I'll be a little patient here. We're not going beyond noon. So I'd like to finish on a good note. I mean, I could run up there and just grab the money and call it a day. We'll see if we can be a little patient with this one. Yeah, it looks a little, yeah, we'll let it run a little bit, not too much. And so this gets into the realm of, robotically trading and then mechanically trading. And, and I just have an eye for the account and I just want to have, an eye for the account, an eye for my, my trading day is going to come to an end. It's ending. I'm not going to try to do anything stupid here. And that sort of thing, that's hard to put into a strategy. That's hard to put into a bottle. You have to get yourself, into the game. You have to get in the game and have to practice. And so we're actually going to go up here. We're going to grab that money. I'm going to grab it. I intervene. I'll reset the strategy. And let me just take a look here. Yeah, so I reset the strategy. Now the strategy, Gabriel, you were asking about the back test. The strategy is telling me that, and for folks on YouTube, they're not going to understand this, but Gabriel, you will. So it's telling me that from midnight to now, I should have made $4,400. Well, I didn't make 4,400. We've only made 2,670, about 50% of that. Now that's only one day. But if that's sort of if we continue to do something like that, that would mean that we're running at about 50% of the back test. And so let me look here on this chart, how far back I went. So over the last 2 weeks, this particular strategy is telling me in the back test that we are to make 54 over the last 2 weeks, sort of made 54 grand. Well, that's not likely. That isn't likely. However, if we continue to perform in the neighborhood of 50%, well, then, is 50% of 54,000 over a 2-week period, is that acceptable? So that's, how we use the back test. We use the back test to measure how we're, what we let me put it this way. We keep track of what it is we're doing and we apply that against the back test to get fighting for the word, an efficiency. And if we're running at 50% of the back test and we can maintain that, then that's what we'll do, and so the back test may show, an unreal result of, 54,000, one mini contract in 2 weeks. But if we can run at 50% and pull out, 20 or 25,000, then yeah, is that acceptable? And can we maintain that? And just in what one has to come to grips with, just because that's what happened in the last 2 weeks, doesn't mean that that's going to happen in the forward 2 weeks, right? So there's always that edge, right? And I probably came out of this and I did probably a little too soon. I left some money on the table and that's fine. we'll see if we can get one last trade off here and see if we get up over 3. If we do, great. If not, but we're not going to probably drop below 2. And we'd be done. And those of you that are passing by on YouTube, we thank you. If you got any questions, let us know. We got a couple of people. Tina, she's here all the time, and we thank you. One day we'll see you in the club. And but what we are not doing is, job owning, trend lines, and moving averages, and when this line does that and that line. See, that is in our view is kind of, it's just fallacy. The mind wants a couple of things. The mind wants a story. It wants a narrative. It's how we recall things. Madison Avenue's got that figured out. Wall Street does. So if we can tell the people stories, they'll remember the stories and they'll buy into the story. They will. I mean, I had a guy, was one of my bosses one time. Couldn't stand him. He couldn't stand him. But he'd be like, Don, I'm buying oil and gas, but I'm not buying the producers. I'm buying the suppliers to oil and gas, the guys who make the pipes and the wrenches and all that. That's what I'm doing. Okay. Like nobody else ever thought of that? But he thought that was brilliant. I don't know. Maybe it was. Maybe it was brilliant. And, but that's a story, right? Somebody told them a story. This is what we're going to do. We're not going to buy the producers. We're going to buy the suppliers. We're going to buy we're not going to buy the internet companies. We're going to buy the guys that are laying the fiber down. Oh, yeah, that's brilliant. That's what I'm doing. My broker tells me I ought to be in plastics. Remember from the movie? What was that movie? Mrs. Robinson. That's an old one. I got to be in plastics. Got to be in the new hot thing. That's the narrative. Those are the storytelling. The other one that is even worse is the mind wants to see patterns, and it's just the way that we do. We recognize shapes and patterns and faces, and we want to see patterns. And we will sometimes see patterns that are absolutely meaningless. And if it gets rewarded, then you want that pattern and you're looking for patterns. And then there's a whole cottage industry around, and books been written about trade what you see. Well, let me know how that works out for you. Good luck with that. Oh, God. I mean, I think that's awful. I think that's, it just, try doing it for 2 or 3 months, 6 months, every single day. It gets really old. It's really old, really fast. I did it. I've done it for a lot longer than that. It was pretty good, but boy, it gets old. So why not? If we can program shapes, patterns, anything else, if we can program that and ask the machine to tell us over, the last X number of weeks or months, was there anything to that? If I had done that, if I had sat my ass in the chair and, I'd committed my time and my money and my capital into doing that, would I have got anything out of it? Why not do that? Right? You ever watch the show Gold Rush? Before, what's the kid's name? What was his name? Oh, Parker, right? He's going to buy a piece of land. He calls it, washing rocks. They're going to dig down the top layer, and they're going to get down to the pay dirt, and they're going to take the pay dirt and they're going to put it in a sluice box, and they're going to wash rocks and get little gold flakes. The guy says, hey, if you buy this so many thousands of acres, I'm going to sell it to you for millions of dollars. What does he go and do? He hires somebody, and they go in and they drill test holes. Huh. And they go around, and then they pull up a core, and now they're only pulling up small little cores. and they see how many specks of gold are in the pan for so many, feet of dirt, but he's going to be moving thousands and thousands of yards. And then what do? They extrapolate from there, but it's not a guarantee, so that's why he'll do random cores. So when we're running like this, that's what I'm doing. I'm running random core tests. Right. But if somebody is watching on YouTube, oh yeah, it's like, it's automatic. And I'm joking here, but there are some, it's an ATM. You just plug it in and it make me money. No, I got to sit here. I got to watch. I got to pay attention. I got to run reports. I got to look. I got to analyze it. Is this going to be something that I can afford to run? And as much as I would like to, I will not do that. And I can't do that for our members. I'm not a broker. I'm not a financial advisor. It's not my money. It's your money. But what we can do is try to do our level best to educate you as to how we approach the markets. And then it's up to each individual person to decide what they want to do. But if you want to, in the end, they may want to trade what they hear and what they see. Okay, then they trade what they hear and what they want to see. Or they might want to do, whatever. I mean, it's their bread and their time. But, this is how we more or less approach it, right? And I just want to, during the course of a week, have run so many yards of dirt and picked out so many flecks of gold, take it to the exchange, get these little things called dollars, and, that's what it is. And the next week we got to do it again. And again, and again, and again. And remember I said, I always get a little concerned when, whenever you get CNBC, market in turmoil, Guy Adami, Dan Nathan. Did you hear what that dumbass did too, by the way? I loved it. Turns out those guys are big wokesters, big wokers. They're woke, they're wake, and Nathan blew up his Twitter account. He put something out there, and Elon Musk permanently banned him. But and then he started crying to the blues. You put Trump back on. You put me back on. Oh God. But whenever those guys start talking about, the market's going to do this, the market's going to rally this, they got all this buzz shit words they say. There's a ton of money on the sidelines. There's a ton of money coming into the market. There's a ton of money. That one's going to be one of the dumbest, because for every buyer, there's a seller. So if there's a ton of money coming in, there's a ton of money going out too. We're gonna crash. Or the other guy, Carter Worth, drawing his trend lines. If you pay attention close enough, if you watch them, and I will periodically, just I'll just be bored and I'll watch some of it. Watch the trend lines get redrawn. That's one of the biggest scams. What they do is this. They'll do this, and it looks to the novice. Let me see if I can do this. See if we say you got a point, right? And price, and he'll do something like this. And we gotta, it's always like this. And then what'll happen is they'll draw a trend line. I got the two trend lines. And I say, okay, well, it's two peers, we're going to break down because, going to break down. And the next thing, we'll get another point. So suddenly we got the next day or a week later. I'm going to just finish this point here for a moment. We'll put on a, Chris, if you can hear me, I'm going to call you right back. Chris is calling. So let me see. So say we got a point. We got the same 2 points. We got this one and we got this one. These are the trend line. And then suddenly, we had a day that was up in here. And then what they'll do is he'll just redraw the trend line. The trend line gets redrawn. And I'll be like, look at how that magically hit, and eventually it will look and appear that it just magically hit that trend line and then bounce right down. But the trend line just kept getting redrawn. We can redraw the trend line automatically over and over again too. But that's what happens. So it feels a TV show, a cable TV show and stuff. They just redraw them. It's nonsense. It's you know, a little bit, maybe a little bit, but people are making huge bets on these trend lines. I know they are because they tell me. I put $100,000. I put, through my entire IRA account, $300,000 short on the Q, whatever. That's what they're doing, and then they lose a bundle, all in one shot. It's like, oh God, But any case. They have a place that you can use a little bit, but this is a hell of a lot easier. I haven't put on one single trade other than taking off a little bit of profit. I didn't make any decision to go in. I didn't make any decision to come out on losses. We have taken a little bit of profit here because we know we're in the last hour of our time together, and that's that. However, too, if you don't take the time to run a strategy and see what it is, or you plug it in, and the first day you have is the day that we had yesterday, and it's down 1800. Oh, that sucks. I ain't gonna run that again. Well, man, I ain't gonna run, and then you're off to something else, or off to something else, or off to something else. Then you'll never see what it was really capable of doing. You just never gave it a chance. Now, if every single day it's down, 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 well, then maybe not, after, like if the test hole, like if Parker says, the guy says, hey, that land's going to be, $5 million, and he drills test holes and says, shit, man, there's not, I got to go too deep. I got to spend too much. I expend too much time, too much energy to get out too little gold. It's not worth it to me. I'm not gonna, no, I'm not gonna buy that land. I'm not gonna run that. So you can run these little test things, but that's up to you too, right? Everyone comes at this differently. We have folks that are software engineers, computer engineers, they do incredible things with spreadsheets that baffle the hell out of me, but they're really, really good at tracking that sort of thing. And I think that's time very, very well spent because they understand. But, if your approach is, I just want to get in and throw a trade on today. I just finished. I just got off a conference call with the boss, and I'm going to get in here and trade. Oh man, I made $300. All right, all right. Tomorrow I'll make another three. And you're doing that. All right. If that's what you're doing, hang with it. Have fun with it, I guess. But I don't think it's what our members are doing. They can tell you not only what their profit factor is, but they can tell you how little time they're in the market, risk risk factors too. So I hope that makes sense. Get any questions, let us know. I want to return a call. Okay, so we're going to, I think this is long enough, right? We're going to turn the strategy off. We're going to call it a day. Now we're still going to be here doing other things. That's for sure. But the strategy is done. We're in the house, right? We're off of our high water mark, but we're in the house. We'll be done. So on YouTube, I want to thank you. We take a look at what Swing Machine has done. No real giant 5-minute winners, but some decent action, two-way action, back and forth, forth and back. Wonderful tool to help you stay on the right side of the market to try to, carve out what you can do. Now, one thing here is, when we say trade what you see, at least Swing Machine is talking to you in English. It's telling you, what it's doing. In 34 minutes, by the way, the 1 minute is $1,000. If you don't have any other questions, you're welcome to visit the website. You're welcome to give us a shout. I want to say thank you for YouTube for coming by. We're going to have everyone have a wonderful Easter weekend. And thanks for stopping by.